Hey everybody, it's me, the Dubeinstein of Wall Street, with my man Dan Ives, #1 tech analyst in the world. We're bringing the whole world down to you out front of the New York Stock Exchange, corner of Broad and Wall, corner of Walk and Don't Walk, where this is the big breakdown, right? We are at record highs across all indices here at the New York Stock Exchange. I know everybody is feeling what's going on. Look, there's a lot of stuff around the election, around politics and all that kind of stuff, but that's not why we're here. Dan Ives and I kind of love to break down and make markets accessible to the general public. If you're 18 and 22, coming out of college, loving the markets, really want to try and understand what's going on with earnings, with markets, with interest rates, you are our audience, right? Even if you're like 25 to 35 and you're already in the midst of your career, but you love the market. Think about it, 40, 50 million new traders have come into the market over the last 5 years. All eyes are on this market. They had a Tesla, they had an NVIDIA earnings watch party, right? In the old days.
And there'll be another one on Wednesday.
And there will be another one on Wednesday. There used to be people who would get together for the Super Bowl, who would get together for like the Oscars. For us, me and Dan, every day in our industry is like playing in the Super Bowl.
And it's just starting. I mean, given Trump White House, deregulation, AI revolution, like we're just still in the early days of as it's all playing out. I think that's the most exciting thing. Second, third, fourth, as me and you always talk about.
Right. So think about how exciting that is. Dan and I have been now talking for maybe 6 to 8 months, and 2024 has been an extraordinary year for the markets, right? We've been going through so much in a post-COVID world, in a post-tech world, in a post-interest rate and inflation world as things are unfolding, and we love to unpack for you what's going on in this market. But net, Dan always talks about it. Dan is the man who called the S&P 500 having a 6 in front of it earlier this year when everybody didn't get that. They were talking recession, they were talking depression, they were talking bear markets. We weren't talking about that. We were actually looking and analyzing it from a forensic point of view.
I can't find any of these. I'm trying to find bears in the
caves. Are there any bears around? Any bears here?
No, but the thing is, because I'm getting worried because they're in their caves trying to find AI in the spreadsheet.
Do they have Wi-Fi in the caves?
They might have some Wi-Fi in the cave. And the bears, and you know what's always funny? I noticed the bears, they tend to be quiet during the week as the market's ripping.
Right.
On Saturdays when the Bulls are watching college football,
right,
the bears come out from the caves. I noticed that.
Right. They just love to talk up that scenario. Yet, every time, there have been a handful of times that the bears have peeked out from behind the curtain in their caves in 2024. Literally, I don't think I can remember a year in my 40-year career on Wall Street where only 5 to 6 times have we seen any kind of a pullback. Do you remember that?
I mean, no, and even when you think about all of the moments that we've documented,
right,
there were these scary moments where there was Fed, Tokyo Black Monday.
Correct.
But the reality is that earnings, numbers have gone up another 5-10%.
Right.
Trump coming in, it changes the whole end. Deregulation,
right,
lower taxes, numbers are going to go higher, AI gets accelerated.
Right.
And even on the China issues, I think ultimately carve-outs happen when it comes to Tesla, Apple chips. Look, and I think next week, you look at NVIDIA earnings.
We're getting NVIDIA earnings next week. Okay.
So Wednesday, I mean, you'll be sitting
What
there.
are we looking at? What are the expectations?
Look, you'll be in Dubai, whether it's caviar or popcorn as Wednesday night happens. And I think this is just going to be another $2 billion beat,
really?
Another significant raise. You look at the underlying demand, 15-1, demand to supply.
Right. Okay, so look, Dan is mentioning Trump, and there is the Trump trade, and there is a market that's rallied severely since he was elected. I'm more of the camp that this is more of a relief rally, although and we are completely apolitical. We're not picking sides here. What we're trying to do is explain to you why markets, we are forensic brokers, and we're trying to explain to you why markets do what they do. And what Dan is trying to explain is that there was some fear. We talked a couple of weeks ago, before the election, around the fact that perhaps Donald Trump may not be that great around tech. It may be some impediment to the future rallying that we would hope to within tech and within AI and within the China trade and within tariffs, right? Those were the fears, but those fears are off the table now.
Look, tariffs are still going to have to navigate, but if you look, I mean, certainty's there. It's going to be deregulation. Khan's going to be out at the FTC.
Right.
China will ultimately be in negotiation, but in terms of big tech, it's bullish, more deal making. And when I believe, you talk about all that money that's on the sidelines, it's just starting now, that $6 trillion is on the sidelines toward big tech, because the second, third, fourth derivatives of AI, the software, Salesforce, Oracle, ServiceNow, Adobe. Now we start the next phase of the AI deployment.
So once people are getting comfortable, but that this AI is not a 1999 moment, but a 95 moment, that this is not a bubble, right? That this is real, that it is a revolution, that money is being deployed, right? The CapEx is in the trillions of dollars,
well,
right?
That's the key. You have $1 trillion already allocated for CapEx.
Right.
In other words, that doesn't lie. And for every dollar of CapEx, it's $8 to $10 of a multiplier across tech.
So you know, look, people's fears are that when you've got the Mag 7 being some of the impetus and the catalyst to some of the rally that we've seen this year, we've often talked about it, because that's the question people always ask. Well, what happens if the game turns on Mag 7, right? And then the whole market collapses. It's not the case. We've talked about the rotation into the Russell, into the small cap and mid cap, right? This is not just a tech rally. This rally is a broader exposure, a broader footprint, and then you've got the second and third derivatives.
And then you add banks rallying because of deregulation,
right?
More deals, Pillsbury Doughboy soft landing, Fed going to cut another 100, 125 bips. Look, we're setting up for, I think, a rip the face off type rally into year end. You'll see the market maybe going into early next year, a little like wait and see till earnings.
Okay.
And I think ultimately in the next, call it 2 years,
Right.
we're talking NASDAQ 25,000.
Right. Dow 50,000.
Look, these are all, I think that could be
These are real
conservative.
numbers and real money. Are there any bears around? I don't see any bears. Do you see any bears? We don't see them.
Look, and the problem is that there,
Are there any bears anywhere? No.
there are some
Oh, there
bears
was a
over
bear.
there.
All
There are
right,
some
I
bears.
heard that.
Look, and it's good. There are some bears out here, which is good, because look, you need the bears.
You do need the bears.
And the thing is, the bears that have missed every transformational tech stock in the last 20 years, yet again, history repeats itself. They'll miss the next Palantir,
Right.
NVIDIA, Microsoft, because the bears, they can find AI on the spreadsheet when they're in their 10th floor of the New York City office building, and that's the issue.
What is that? So explain to me, what is the psychology behind that? You speak to the bears.
No, but the psychology
What is their mindset?
The psychology is that they're so cemented in their views
Right.
on valuation, historical numbers,
Right.
bubble, missed the first part,
Right.
AI is not real, it's another 99 moment.
Right.
But the reality is, I mean, you talk about, like, as someone like myself that sees around the world, like, it's not even a question that this is real.
It's real.
And I think, like, look, it'll be interesting when you go to Dubai and come back,
Right.
just to see your perspective, even on a global perspective,
global.
because I just think what they miss, like they've missed every other transformational tech thing,
Right.
they're always afraid of what could go wrong.
Right.
And that's why I continue to tell you, they're the ones, it's 10 p.m. in the AI party that goes to 4 a.m. They're the ones outside being like, doesn't even look that much fun in there.
Right.
They're like, I'm gonna go up to my room, read a book.
Right.
Let's meet at the diner at 6 a.m., see who did better. The bears up in their rooms reading a book, the bulls that
Where
went.
are the bears? So, look, I love that scenario, and it's funny. I'm sure over time, look, we know the inveterate bears that have been in the market. They're the ones, the big short guys. There are people who have always been on that side of the trade. You and I tend to be the ones who are forever bulls. And look, it's funny. It's like the cup half full people, right? It spills over into our lives. Think about it. You guys see us, right? We're not your normal guys. We're not your normal straight up media guys, right? Who just sort of follow a journey on a path. They never step out of their way, right? We like breaking barriers. We like to play the other side of the coin.
But also it's seeing the forest with the trees.
Correct.
Because we're not just sitting here being like, okay, market's ripped. We're talking about like, where is this all going over the next 12, 18, 24 months?
Right.
And when you think about deregulation of crypto,
right.
Like, now let's see what I believe over the next 3 to 6 months when companies now start to actually put some of their cash into Bitcoin. I think, these are...
So that crypto 250,000 makes sense.
Look, I mean, but now these are some of the sort of conversations that happen in a soft landing, and I think a government ultimately I view this much more of an 1982 to 86 period.
Explain that to me. I don't remember 82 to 86.
I view this as more start of the 80s, start of the bull market. Wall Street, Michael Douglas, the whole thing.
Right.
Going 82 to 88 was really what I view
big
as
M&A. That was Ivan Boesky the year.
But it was M&A, deregulation,
big takeovers,
Reagan years,
risk arb.
Like risk arb.
Right.
I view this much more of an 82 to 86
I
period.
like that, yeah.
Rather than, let's say, like a 90 to 94, as an example, recession, 92, 93. This is much more of an 82 to 86.
So 82 to 86, this market was just blustering. That's right. It was a beautiful rally market.
You come out of the Jimmy Carter years, all high inflation.
Right.
And then look what happens, 82 to 86. I would say really the foundation of what we're living in today.
Right. That was building the foundation of a strong bullish market.
Was really in the 80s.
Right.
So I view this much more of an 82 to 86 period.
I like that.
Where we are. So I don't view this as, let's say, 80, 81. If you want to think about the last 2 years, going up. This is really the start of that next path. And you just happen to have a fourth industrial revolution, biggest tech trend we've seen in potentially 50 years.
And look, and you also are looking at an administration that's going to make this a little bit more favorable.
Deregulation.
Right? Irrespective of your political move.
But
it has nothing to do with
they're going to defang regulatory.
Right.
Regardless of your left, right, center, purple, but it doesn't matter.
It doesn't matter.
You're defanging.
What does that mean?
You're taking the teeth.
Defanging.
Okay,
I was thinking of fang as Facebook, Amazon. No, that's not fanging.
You're taking the teeth out of regulatory.
Right.
And that, at the end of the day, it's more deal making.
Right.
It's bullish. Right. It's bullish for tech.
Okay. So look, we are presenting a scenario to you. We're in the middle of November. Okay, we may see the next couple of days. I did come up with that little scenario that historically 8 out of 8 political cycles, when we've had election years, that the week or so after the election, you had a big rally coming out of the election, then you had a bit of a week, maybe 10 days coming into November 21st, and then you had the market turn around as we enter into the Black Monday, Black Friday, Thanksgiving retail surge, and then Santa Claus comes to town, the runway's clear, and you have a huge bullish rally into the end of the year. And that's how you see it as well. And then you also see 2025 as the uplifting of this whole scenario.
Because you have to position yourself for what the next step is. And I think many that have been offsides in this market will start to readjust going to 25.
You're seeing confidence in the marketplace. You're seeing strength on M&A. You're seeing IPO market becoming robust. Basically, the blinders are off. The confidence is there, and all the people who have been the naysayers and even the bulls, we may actually see the bears come out of hibernation and have to start covering their situation.
And then next thing you know, they're behind the velvet ropes trying to get into the party.
Exactly. Think about that. The bears are going to come out and they're going to be begging to get into Studio 54 to hang out with Madonna, David Bowie, me in my Rolls Royce, wearing a we won't even go there. Those were the robust, spectacular years of 1980. We're going to start to see that again in 2025. Dan is giving us a scenario where all bets are off. It's time to look. I know people are fearful to buy into a market that's trading at record highs. But if you think about it, this record high has gone on day after day, week after week, month after month, almost year after year here. In 2025, 2020, COVID, $3 trillion into the marketplace over 3 months, back to even by August. 20% rally in 2020, 28% rally in 2021. Legitimate pullback in 2022 due to inflation caused by COVID, okay? And then you saw 23 and now 2024 closing out double-digit rally in the S&P. We're not making this up. This is not about opinion. This is reality, real numbers, money being put to
And the
work.
reality is many of these bears, if they were scouts in the NFL, they would have been negative on Brady coming out of Michigan 2000 draft.
Exactly.
It just speaks to but I believe the opportunities too for alpha.
Right.
As we go through this.
What is it? Explain to the audience alpha.
I think the opportunity to ultimately to make money above the market.
Right.
And I think when you look at alpha and you look at the moves here,
Right.
groupthink, sentiment, bears, noise,
Right.
it creates the opportunities too.
And that's what we talk about. Connecting people to opportunity, connecting opportunity to money and the stock market. This is your time to invest in stocks and not stuff. This is time to invest in your future. Put together a portfolio. We are the greatest consumer and most loyal generation of all time. This is your chance. There is an education out there with me, Einstein and Ives. We are here to break this down for you. We're here to make this story accessible. We're not here to catastrophize it. We're here to educate you, motivate you, and inspire you to get involved in a market, get involved in your future. At the end of the day, in 20 years, you want to be sitting back in the Hamptons with a Coco Loco midday, just worrying about nothing and making some money and enjoying your life. Right, my man?
Awesome.
Dan Ives,
Great.
Einstein and Ives, that's all we got to say. It's a beautiful day in November. I hope you all have a great weekend. And that's all I got to say about that.